Share scroll.
My work is easy because I use ClickUp. Here's how I keep track of all my tasks. I start my brain dumping everything I need to get done in a
Good for you. Right, let's wait. Should we wait do we wait for the rest of the squad? Oh, right, there are people here. Oh, excuse me. Right, come on, guys, get yourself in. Oh, sorry, you are coming in. Sorry. I was just about to give Paul Scouse a deflammatory remark because he's in America and should be there, but he's already there. So sorry, Paul. Well, I didn't say it, so that's fine.
You're all talk, aren't you?
Yeah, I'll talk and no action as usual. Yeah. Actually, it's my fear. Am I showing on the screen? Have I gone and haven't done my layout yet? Either I'm too busy complaining. Right. Every time I put it in the bottom left-hand corner, and every time it's shared, it goes in the top right-hand corner. And I don't know why. All right. Yep. For another new member, supporter of the YouTube channel. Thank you very much. James 93309. It's quite nice. We're getting a few people that are supporting the channel, which is good. Right. Do I wait a little bit? I notice Andy and Clive are having a spat about IG. What's not working? It's because we're on YouTube as well, as everyone's quiet. Right, okay. Let's get going. Right, okay, I'll just save this. So, right, what we're going to do today, we've got obviously we're going to be trading the UK market. Afternoon, Paul Trader. We've get the daily edge, and the daily edge is what we set off in the morning. These are the things that are going to happen, and to a big extent, they have happened. We're going to have a review of all the trades we did this morning, which is the FTSE, the DAX, and these are the core trades. So these are the core trades you want to trade this afternoon, US 500. Gold, we're just waiting on gold or some resells on gold, but we didn't trade it this morning. And we've done 2 or 3 trades on crude. So we're either 2 or 3% up, depending what you did on crude. And we've got a trade on crude live. So we'll review that. But what I have done, once we get going, after I've showed you the trades I've got some ideas for, is we'll go through the add-on for the American market. Oh, I include the US 500 in American markets, but started to, when we do a USA session, started to do an American trades. Now, this is quite interesting because you know we use AI agents to look at the market, and they come up with things like this. And then I spend an hour and a half every morning working out what it's found and whether I agree with it or not. And yeah, so quite clearly gold is not a buy. Crude, crude is a buy. We've already done that. Cautious, that's a cautious sell. That's a sell. That's a sell. And that's a sell. It's all cautious. And the reason it's cautious is because I've used the AI bot and I've told it to use simple moving averages, so they're a lot slower on what's happening in the market, and to look at the likes of what Bloomberg, Reuters, Marketplace, 160 different sources, make sense of what's been said, correlate it to make sure we've got at least 3 sources say the same, using SMAs, and it presents its data like this. I use that data and then my experience of what, 28, 30 years. And I turn that into what I think the trades should be. And sometimes it goes against what the market says, but I'm not bothered because we've never lost a week in 6 years. So we generally do okay. And I turn it into this. This is why it takes 1.5 hours of chart research every morning. The bots do it quite quickly, scrape the data, give me all the data. But AI is, it's still fairly weak and it can't really reason that well. And it's not particularly fantastic in the markets. But what we can do is very quickly assemble what the rest of the world thinks, and some of the major big players for providing data like Bloomberg, Reuters, what's on Yahoo, what's on Marketplace, what's in all the big places, and have a look at what all the analysts think using SMAs, and then we can then turn that into a day trading effort. So what we've got here, we'll very quickly have a look at this because we like to close the gap on the DAX and on the Dow. So the ATR on the DAX, which is, excuse me, the average true range, not the DAX. Why do we keep calling it the DAX? It's the Dow. You can see what happened yesterday. The market really come off, and NASDAQ hugely. I've not done the daily pivots on the NASDAQ because I'm going to show you how we do those every day live. But you can see the average 5-day average true range is huge, 694 pips. Ideally, we have to be 100 to do the gap trade. We have to be at least 104 pips away from the closing gap. Ideally, 208, give or take. This is the average true range in the market. So these are the impulsive moves in the market. So let's have a quick measure. So there's a closing gap on the daily pivots, and we're 200 over 208 pips away. So yes, we can put something for the closing gap on there. So what we're going to do, we want to risk for the people in the trading room and you guys, we want to risk the 1% of your bank, and we've asked everyone to use £2,000. So we want to set that to 0.1. Is Andy in? Andy's not in, is he? There was an issue with the auto quantities, I think.
Yeah.
That was right, was it?
Yeah, I've stopped. I've stopped using them. So I kept going in at 0.01.
Yeah, idea just crap.
Yeah.
The management of pro real times, terrible. But there we go. But don't listen. It used to be IG used to be a really, really good broker. It's really gone down here lately in its ability to manage tech. But there you go. There's no point in complaining. Nothing happens. So what we're looking for here, we're looking to buy the market prior to the gap, prior to the cash open. The cash open in UK time frame is 1:30. So we're 20 minutes away from that. So what we're going to do, we're going to place an order. We need it roughly 200 pips away. We can get away with 109. So this is what we do in the morning. We're kind of look roughly about 200. We'll put that in an order. And what we're looking for here, I'll get my, excuse me, my annotation pen here. What we're going to look for is when the market opens, it's got a decent color up here. It's a cash market, like all the indices are. So what we've got here, we've got the closing gap from yesterday, and the market's all the way down here. So between these 2 points, from here to here, there's been no cash trading. So that's a hole in the market, and we call that the gap. And the idea is that what's happened here? Okay. What we would like to try and do is to have an order in, if we can, far enough away from the gap, and a 1-to-1 risk reward. So we're risking 1%. And what we're looking for is the market makers to try and help push this gap. Now, there is a magnet a little bit lower than this here. So if you look, if I can just select the tool here, down here to the daily low. So the market's down. We're trading under the close. We're also trading under the daily low. So that's what's known as the extreme gap, the low of the day, prior day, yesterday, and where we are today. It's called an extreme gap, an extreme trade. So what we try to do is, that's a very strong magnet, and that's a pretty good magnet, and we're looking to close that gap. So that's why I've put those in there, and that's looking at a gap trade. So we zoom out to the 4-hour level. You can see here at the 4-hour level. There we go. Just above S3, the classic pivot, extreme pivot, and we're coming down to CBOS, which is Camarilla breakout short. This is a prior resistance level that I think will take that level out. Wow, I don't know what's happening with PRT. It's really running slowly. So there we go. And then we've got we've got the 4-hour. I think we can ignore that. That's Trump news and spike. I think we'll take these levels here as if what's happening. It's not just we only just got issues to do with pricing. I think it's reacting like a sloth, isn't it? Right, so we've got the 200 EMA here, quite clearly saying the market is pretty short, very short. In other words, what we would be looking for today, ideally, if we can get this gap closed, that would be good. And if we can get the market to come up towards here, CBOL, that will be a screaming short. And that will be our cam trade, that guys. We'll do a cam trade on that. And that will be a 104 pip limit with a 104 pip target going short. But let's see what happens in this market. We're going to put that into 5 minutes, and then we're going to go on and have a look at the other markets. Come across here. Right, so we'll do the pivots in the first 15 minutes for the NASDAQ, because we're going to show you a trade on the NASDAQ. So let's just go and have a look at where we are with the US 500. Right, so here's the US 500. So the US 500, this is what, so you'll see the targets here. Excuse me, have already been, this was written at 6 o'clock this morning. And what I was looking for is the market to rise up, hit the close, and come back down and hit our targets. And those are going to be our target for the day. We've already hit the target. So I know, Clive, you do futures trading. Did you trade that futures trade down?
I traded the American. I was just on the DAX this morning, but I held on to my DAX, so I got 300 odd points out of that.
Lovely.
Which was nice, yeah. But
yeah,
really been concentrating on oil.
right. Okay. So what we're going to do here, we're going to watch the Dow when it opens, and we're going to put a level, because we've gone down to an extreme area here, which is a 4-hour low here, and it's right near CMOS. So what I'm going to do, I'm going to put an alert down here, and if the market moves up, then we'll have a bit of that. There's a fractal there, which is quite interesting for a gap close. There, a fractal there. So the ATR that we should be looking at here is roughly about 15 pips of where would be the perfect storm. We've got an extreme gap there. And what on earth is going on? This is really, really slowly. So we've got 13 pips in the breakup there. We really need to be 15. So we'll keep an eye on that. Let's go and have a look at that DAX. We've still got 15 minutes to go. It's a bit better opening up half an hour earlier than 15 minutes when it's we did a bounce trade on this, didn't we?
Yeah.
Let's have a look at it. Let's wait and have a look at it. Right. So there was 2 trades here. So we're up 30 points. And the bounce trade, the market this morning comes screaming down. We closed the gap. Nice chunk of change. A few people in the room made a lot more by hanging on to the trade and running it through CBOTs. We smashed both the targets, all specified in the daily edge. And what I was explaining this morning is when we come down to the let's take this off a little bit. Get rid of that. That's from this morning. So this is a trade. This is what we call a hitting the wall trade. Activated, it's not stopped, and it's not one. But what I was looking for here is this is my bullseye for the morning. Is wanted the market to come down into here or into S3, and we're going to buy that. So we put an order in, which was a limit order buy, coming in and hitting this. Now, what we did, I've got time to explain this. I think I might have. The market, on average, moves 694. No, that's the DAX moves 570 pips. What's going on? Right, sorry about this, guys. Nothing I can do. It's IG. 570 points. So we've got 570 points coming down roughly around here. So 570 points from a daily pivot is, on average, what you can expect the DAX to actually move on any given the past five trading days. So it's quite volatile at the moment. So what we did is, knowing we've got an S3 pivot, we thought we would put an order in and then leave it and go away and just put a cheeky little trade in there for a bounce off the S3 pivot. The issue being that, excuse me, if the DAX is bullish round about 1 o'clock, round about now, then it will continue to be bullish, and it isn't bullish. It hasn't had a rise. It's had some attempts off this key pivot. And if you're watching from YouTube, I should put YouTube up and have a look, see if anyone. Yeah, there's a few people on YouTube. The Paul Trader, what mate USA? I'm in Houston. Oh, nice, James. Good morning, all. Happy all. Yeah. Great video, Steve. Rory, great. Thank you. What is Paul asking, why did you hang on to it? Well, you're trading under the 200 EMA and market's negative. You're trading with all the EMAs all the way from 4 hours, all the way down to 15 minutes. It's trading under the 9 EMA. It's a screaming short until it isn't. And the area that we expect it to bounce is all the way down here. So we expect the market to keep trading down. My job in the room is to also trade, but also to teach, to show people how to get one-to-one risk reward, how to manage trades. So if you're trading on your own, of course you would trade it. You would trade it all the way down. And clients in the room, experienced trader in the room, and he took that decision to short it all the way down. That worked really, really well. So hopefully that answers the question. So to answer the other question, C-Ball, it's a Camarella breakout short. It's a Cam R4 level. Hey, Pep. Thanks for joining us. The Camarella R4 is really key. If you don't know what, if you don't have pivots on cash markets or any cash market, and you're trading blind, all the professional traders use cash pivots. We use classic pivots. Don't really use R1 too much, but R3 is an extreme extension in the market for the day. Camarella breakout short, as I explained this morning, this candle here. If you trade under, if you get a close under the Camarella breakout short on a negative market, so there is the close, then the market is likely to continue on. It's likely to continue on until it sees the next big pivot, which in this case is S3. Hence, this is why you keep trading. You stay in the market, until the market tells you it's had enough. Those are the rules, really. So done really well out of the DAX. The FTSE, we closed the gap on the FTSE again this morning after failing the first attempt. Then we tore a new one for it. The trading bots come in and shorted as well. So they worked really, really well. The trading bots came in twice and give it held twice. So that was really, wow, this is going really slow. So this is going, this is the stuff that I write early in the morning. This is, we traded the market. First of all, we traded to break a 15-minute bar and 926 cross. It's just a strategy trade we have. And that just got stopped. And then we look for a reversal under the spike up onto the daily pivot, sold under the daily pivot, straight into the close. And then the market came down, hit target number 1, hit target number 2. Again, market on this occasion did not close under CBOS. So the market is likely to not continue to go down. And you can see it rejected CBOS, whereas the DAX accepted CBOS and went on the way down. Very, very important to understand the technicals on pivots. If you don't have pivots, they're all on my website. You can download them on the website, and I will show you how to fill in a pivot once we get going. The other trade we had this morning was on crude, and I put that in the room this morning and into the scanner. So this is for people in YouTube watching from wherever. This is, well, from all the people that watch, about 220 odd people, 90% of everyone that uses this are all American. America seems to really like scanners. UK not so much. One little tip. We've got 6 minutes left, so one little tip. And I didn't know this. The guys in the room this morning told me. Is if you can't see the resolution particularly well on that, that's because it's been turned down. The auto comes on at 144 points. So it's the pixels. If you want to have it high resolution, as high as you can get it, you go to 720, and it makes all the characters really, really sharp. I know that there were some people. Was it this morning or was it yesterday? Anyway, that's on the website. This runs every day from 6 a.m. UK, 2 hours before the UK market opens, all the way through to the American close. And it shows you 15-minute bar reversals, 15-minute fractals, 1 hour pullbacks. It shows you the pivots and searches through all the different trades for you. So for instance, there's 17 now setups. Oh, it's got an ad there. It's flipping out, typical, isn't it? It shows you all these different trades. So at the moment, there are 17, 18 opportunities, and they're all time stamped here when they first happened. It tells you how far they've moved off from when they were time stamped. So it gives you an absolute live stream of what's good, what's not, and what to have a crack at. So if you haven't used that yet, give it a go. If you haven't got the 15-minute bar strategy, which is absolutely free, download that off my website. There are all the links in all the videos that we do. And yeah, jobs are good 'un. So this is crude. So we traded crude this morning from low levels down here. We've had a couple of trades onto crude, and then we were looking at this resistance this morning, waiting for the market to pull down. And I set for the room a 1% trade on a fractal breakout of this area here. Now, I wanted to do that. I also we had a 15-minute bar here, if you notice, opened up clear of the 9 EMA, and that did indicated to me, it's a type 2 bars, you know, that market was very strong. So I took a very cheeky 1-to-1 on that also, and took the money there. On here, we're looking for about 1.4, but another 1.4%. So we've made probably 2 to just over 3% on crude this morning, and we're looking at trading that one again. We'll have a look at what happened to crude. Right, okay. Oh, just on it. That's interesting. It's the first time I've had that. A WhatsApp to say, where's your website? Hang on. So, can I pull this up very quickly? That's my website. There's lots of free stuff there to download, including the 15-minute bar. It's been downloaded about 1,200 times now, something like that. There, that's to download. There's all sorts of free stuff on there, and then that's the daily edge. That's some stats from last year. It's accurate. We hit the market, and that's recorded every single day for a year, and 97%. And then these are the cash pivots. You want a bit of cash pivots. There we go. Anyway, so that's where you get this stuff. Right, let's go and open up on the Dow. Hang on a second. Have I got the right room open here? The right room. Well, okay. So right, yeah, I've got the room open. So I think it's Paul Trader UK. I think it was Paul who was asking, who said he couldn't. Let me know if it's you, Paul, that had a problem looking at the characters on the screen on the scanner. And hopefully, if it was you, then you know now if you open up the little gear wheel, you can put up and increase the quality of the screen of the scan. No, it wasn't you.
No, it's Thank Me Lord or something.
It was who?
Mr. Trader something, or
Oh, right. Yeah. Sorry.
wasn't it? Yeah. It was,
Something well, people have all sorts of names and you don't
yeah.
know who they are. So let's get to this. The
Yeah,
Dow.
Thinking Trader or something.
Yeah. Right. Come on. Oh, do you know what? I don't know what flipping heck's happening here. It's moving like a sloth. So we set our order in and we've been triggered. We've had 200 points stop. What we're looking for is, as the market opens, we're looking for traders to buy into the market. So let's have a look. Are we going to get stopped first? Because if we do get stopped first, then we're certainly going to wait for the gap as well. We smashed it first go on the DAX, not a problem at all. And we had to have a second bite of the cherry on the FTSE. So what we're hoping for is we've got Camarilla breakout short, going to put a bit of a base on that. And we're waiting for an alert to go off for the S&P at the same time. So we're coming down to CBOS now, and we're banking on the pivots being bought. Either two things: we're waiting for the market to immediately have orders on the open to close the gap, or we're waiting for people to buy CBOS. Now, if that doesn't happen, then we need to stand aside and take stock of the price action. To do that, we'll zoom out and we'll have a little look. But this is all live trading. I will see nothing in hindsight, because nobody learns of hindsight trading. You only learn off when you're doing it live. So let's watch. Oh, it looks like we're breaking CBOS. So what we will do here, if the market continues going down, we are not going to follow it. Where's my pen gone? There we go. So if the market continues further down here, that's fine. What we'll do is we'll get far enough away, maybe 50 pips or so, we will do a stop buy order to close that gap again. And we may as well set it. Let's just zoom out now. So quite interestingly, we were as the Camarilla R4 did not hold. So one thing that I would be minded to do, if I was going to buy a bounce for the gap, possibly later today, offer, crying out loud, come on. There we go, into this level here. That would be the perfect storm. If we break under here, we need to close under there. And if we don't close under there, then we can see that market's going to be rejected. So what you can see here is you've got all these lows here, here, here. What we need to do is make sure, wow, this is running slow. As far as practical, we're going to take out that oblique descending resistance line. We either want the market to come lower, down into this area here. Wow, this is running slow. We want it to either come down here and look for a reversal of a key level to close that gap, the closing gap, or we want the market to come down just enough away so we can put a rise trade. It's what we call a rise trade in the room, that we'll do a stop buy somewhere around here, just above Camarilla breakout short, and wait for the market to come back up. But we really want to be, I would say, 50 pips or so under here. Oh, that's accidentally put the order on. It's not cancel. I'm running very, very slowly with my mouse. Is anyone in the room having problems with IG?
Not so far.
Just
But I'm running a lot less on my screen, so I've had a lot of problem at American time of it just completely grinding to a halt and having to go on to 11. So I've only got a few charts open rather than the bank that I normally have. Yeah, I think it's a problem when America comes on. Everything just seems, I don't think their system can cope.
Right.
Well, my computer certainly can't anyway.
Yeah, well, I'm running an i9. This is a MacBook Pro i9 with 3 gigahertz.
Yeah, I've got nothing like that.
Quad. It's an absolute beast of a machine. And I'm running a 500 meg broadband. And so I don't know why it's running so flipping slow. Don't know. It might be an issue with Zoom. sharing the Zoom screen with the room and then projecting the room through YouTube. So what I've done here, while I've been talking, I've been clicking away just for people. What we're doing is a rise trade now. So what I'm looking for, wanted the market to, it looks like it's going to close under CBOS. I wanted the market to be at least 50 pips away so we could have a rise trade inside Camarella breakout short. Now, if this market closes, and we've got 3 minutes left here, if it closes under CBOS, then the market is likely to continue in the same direction. So we might see this. So what we could do is we could short the Dow, but at the moment I'm only interested in a gap trade on the Dow because it's susceptible to vicious reversals. So I'm going to let it do what it wants to do, which is come down a bit further. If I'm going along, which I am here, I'm only going to go along inside Camarella breakout short. And I'm going to keep my 200 pips as my stop. It's my 1% risk, and I'm going to come right up into the close here, and I'm looking to look for 1.5. So in the afternoon session now, we're down 1%. What I'm looking for is a regain of 1.5 back. So we make, on balance scenario, 0.5% profit. Doesn't mean it's a win-win, but that is what we're looking at. In your mind all the time, you should be thinking about risk management. What can I do to protect my bank, but also make money? That's what it's all about. So what I'm going to do, I'm going to put an alert all the way down here. That'll allow me to. This is peculiar. Why is it running? The alerts aren't working. The quick and dirty alert's working, but the normal alert seems not to there. So there's a normal, a quick and dirty alert. So if the market comes down there, that's fine. If the market comes back up above CBOS, I want to be alerted again. It's not alerting. Come on. Put an alarm in. There we are. What can I do? I'm running bots in the background on other accounts. So hang on a second. I'm going to turn. Some trades on. And then T4 running. Let's get rid of that. Turn that off. Let's get some. I've got 15 windows running on 3 screens. Right, let's get rid of these. Let's speed up a bit more. Right. Okay, so that's what we're looking at there. I'll just have a little look at where we are. So we know what we're doing with the Dow. We're going to get the Dow to settle off. It's now closed under Camarella breakout short. So that's telling me the market's probably going to go further down, which is fine. So let's go and have a look at the US 500. This is hardly tradable, this is it. Right, so we've had a challenge, haven't we, down on the, look at that, bounce right off. We'll just take this off.
Yeah, NASDAQ's done very similar as well.
Yeah. Just for the guys in the room, guys on YouTube won't know, but the NASDAQ guys, if it's got 4 minutes left to complete the 15-minute bar, and a break of that 15-minute bar is short today. Right, let's get rid of that. So we have a bounce off CBOS. We do need to break structure. We've got lower lows and lower highs coming in. So there's no reason at all to try and roll long to close this gap. But if the market starts to give us some structural change, in other words, if these lower highs stop and we start trading above here, it means we're breaking the structure to the top side. So then we can look at maybe a 5-minute fracker break going into the extreme and then closing gap. Looks like we've got a bounce off CBOS that has been rejected. And the whole thing about trading, of course, is do not guess, do not swag it. It's scientific wild ass guess. You might get lucky. Or the other thing, if it feels good, talking about the word lucky, we have another trade that we call a Clint Eastwood trade. If you're feeling lucky, punk, sometimes works, sometimes doesn't. But we don't want to do any cowboy trades. We can see clearly down here we've had people we put in stops under here, and this might be fishing the stops out, but it definitely has had a little look at camera on a breakout short. Let's do a bit more of a helicopter view. Market is very negative. It's very overcooked. The thing I think about from a macroeconomic point of view, of course, is that is there anybody in the market going to want to hold a trade over the weekend? I know good old Donald has said he's going to attend. Can you trust him? I don't think so. Tehran and Israel are still going at it hammer and tongs, and there's another 2,500 Marines rocked up into the Red Sea area. Is he going to do his favourite thing? Rock up at 2 a.m. on Saturday morning and start bombing or manoeuvres, let's call it, on Iran? Don't know. But at 4 o'clock, we're going to have a session. We've won the past 4 weekends on the bounce with our crude trading. So at 4 o'clock, I'm going to come on and we're going to position ourselves with guaranteed stop losses, ready for crude to do its thing over the weekend. But it is an all or nothing trade. And what I mean by that is crude, the markets, the big players, the market makers keep resetting crude with big spikes to knock tight stops out. But if it's over the weekend, then you need a tight stop. And if it's over the weekend with big spikes, you need a guaranteed stop to make sure the market doesn't jump past your stop. We don't want brokers trying to weasel out of honoring stops. So we're going to get a guaranteed stop on that. So here we're just waiting for the market to do its thing. We want a confirmation that the market is not going to break camera breakout short, because we want this gap closed. The gap yesterday here at 6591 was not closed, and this is the color pink that we've put in. These are open gaps in the market. There's another gap from the 11th of March here that was not closed as well. You can see the deterioration of the trend, markets going down, which leads me to the analysts and everything else. Don't believe what you're told on the internet. So what does this say? So I've not read any of the cautious. Price sits below the daily at 2 with a clear sell bias. Yeah, absolutely dead right. Standard side range is at 6450. Standard side range 450. That's not standard side range. That's a short backside of it range. All right, yeah, short below 645. Okay, target 6400. Down here, I would have said target 64.25 because it's CBOS, high risk event. I'm going to bounce it around, blah, blah, blah. So, yeah, actually, yeah, the AI, I would not have altered that too much at all. I would have said, what would I have said? Just looking at the technicals, we know what the macroeconomics are, they're all pretty low. The technicals, I would have said, ideally, sell a failure under Cambrella break. What was that? 65.30, what did it say? 65.40 to 50. So my view would be sell the market below C-ball or on C-ball. So if I said sell, get this pen working. I'm going to start. If I said to people, if I said to the room, not YouTube, the room, YouTube guys will know, sell C-ball, why would I say sell C-ball? Can anyone remember? The market screaming negative.
Country.
Absolutely spot on. Thanks for our notional Scouse American. Cam trade, absolutely dead right. The market is screaming long, screaming short, and that's a long signal. Generally, when we are going against the trend, a breakout level acts as a really concrete ceiling. The market usually bounces off a concrete ceiling and comes down. Likewise, if we're going long and the market comes down, it hits a concrete floor, CBOS, and then goes back up again. So there's a cam trade on there. So remember that, the cam, short the cam today. If the market comes up, short the cam. I would like the closing gap today, but if we don't get the closing gap, I'm not too bothered. Now, if this was the only thing that we were trading today, in other words, the US session, we'd be a little bit more focused at seeing if we can get some shorts right out the bat. But we've made, what, 2 to 3% profit this morning. Let's not give it back with a weak American session because there's nothing really moving here. There's no real news and the market's not particularly good. I've just seen here Paul Trader, obviously not watching what we're doing. He's just typed in inverted head and shoulders on the FTSE, 15-minute. Oh, gosh. I would never take any notice of an inverted head and shoulders on 15 minutes. It's not very... head and shoulders on 1 hour and higher, great. But head and shoulders, it's kind of a slow, lazy pattern. I would go for a murder pattern or a 15-minute bar reversal rather than head and shoulders at 15 minutes. It's not particularly good. It doesn't mean to say it won't work. It just means it's not particularly good. Let's go and have a look because someone said something. Let's go and have a look at it.
CBOS trading's better on that.
Wow. This is slow, this. Right. So that's a rejection there, bounce off C-ball. So, well, I've got head and shoulders there. 15-minute. So, well, you could argue there is one in there, and it'd be hard to argue against it. So there is a left shoulder, the head, loose, righty tighty. So there we go. There is a breakout there. So closing gap has already been hit. Market's likely to go to the closing gap again. Do we want to trade this long? Definitely not. It is going against the trend. We've already traded this short. The targets have already been hit this morning. If you want to go against the trend, you can. It's trading up above the 9 EMA. So if you are an EMA trader, and I've not done the video yet. I've not cleaned the video up. I'm going to release it on tomorrow on Saturday, which is I'm going to use the 15-minute bar chart, 15-minute chart, I should say, and how to enter a trade. How to enter a trade correctly in the way that and the style that we trade. In other words, types of candles, sizes of candles, the correlation between the 200 and 209 EMAs at all the different levels, how to stack the 4 hour, the 1 hour, the 15 minutes, how to stack the 4 hour, the 1 hour, and the 9 EMA, how to stack the 4 hour and the 90 EMA with a different candle size, and how to start reading the market and where it is moving with Icon candles. So this is, I guess, there already is a video out showing you how to trade, and then showing you how to do a trade in 15 minutes. The second video was about Icon candles, which is part 1 of the first one. Part 2 is the one released on Saturday, and part 3 is fractal trading, how to fracker. And that will be, again, on the next few days after that. So if you haven't seen those, go and have a look. Invaluable. Well, I think they are. It's just insights into how we trade in our room. So if you are a 5-minute and 15-minute trader against a trend, we had Clive telling us he's a ticker trader, which obviously nerves of steel, doing a ticker trading. But if you're using 9 EMA, so 9 EMA, very, very quickly, we did this morning in the room. But if you look at the 9 EMA, right, so 9 EMA that's a type 1 candle on the 5-minute. Type 1 is a flat bottom. If a flat bottom candle closes above the 9 EMA, you go in long. And you stay in long until the market either hits a target 1-to-1 or it reverses back under 9 EMA. So there's a type 1, for instance, there. You take a break of that candle and you're in the market until the market closes out. You can see the difference there is you're in there and you're out when the market actually closed here. So you lost a couple of points. But yeah, if you traded this one, then it was a break there and you're in here. So, you know, we're going against the trend. So it is quite difficult. And going against the trend, you may well get a few pips. Now, this has been accurate, super accurate. And I've got a comment in the room this morning is, why not use 4-hour bars and put it halfway between and big stops? Well, yeah, that's okay. And hopefully you get, if you use Nike Nashi, the probability of you winning is more often than not. And you might get you 1 or 2% over a period of 1 to 3 days, and that's great. In the trading that we do, we trade from 5 minutes up to maybe 1 hour, usually on a 15-minute schedule. And we do precise trading. So we get in and we get out and we take the money. And rather than wait 2 or 3 days for 1 or 2%, we'll get 1 or 2% a day every day and be very accurate in what we do. The difference, the analogy, because obviously my background is military, difference is between sending in a Tomahawk cruise missile through somebody's window 1,000 miles away, being super precise and accurate, or sending a load of B-1 bombers over and bombing the backside out of it with 38,000 feet and hoping you hit. You know, let's be precise, let's get accurate, let's understand how to read the markets and respond to the markets. Be mindful of the macroeconomics, but under every circumstance whatsoever, trade what you see, not what you believe in. The market is always right, even when you think it's wrong, you are wrong. The market is always right. And if you know how to react to a market in your toolbox of strategies and timeframes, then you'll always have the edge on the market. Do not have a bias, never have a bias, always be patient, always have your toolbox and respond to the market. If the market moves in a peculiar way and it aligns with one of your strategies, use it. If it doesn't, do not be sucked into a trade. If it's not part of your toolbox and what you do, do not trade. Right. I'm going to shut up now, and we'll move on to the next trades. We did say we were looking at Germany, weren't we? So let's go and look at Germany. Germany, DAX is a peculiar one on a Friday. I always like to try and get in long on the DAX. It's, we were talking about a particular guy this morning. I don't know whether he's on. I'm not going to name him. He's got his handle is Mickey Long. Is Mickey Long on YouTube at the moment? Let us know if you are. So we're doing it. Oh shit, me robot's gone in short. Right, that's a robot. The gear wheels there. The robot is accurate 80% of the time. Do you know what I'm going to do? I'm going to switch the robot off because no one likes to see a smart ass making money. I'll turn the robot off and take the profit.
Oil will be setting up on the 15-minute.
Right. Okay, thanks, Clive. We'll go over to crude. What we're looking for is, look at this market just testing at S3. So my scalper bot has gone in and just ripped a bit of money out of the market. We'll talk about that, guys, next week. We've been doing the test, and it's 78 to 82% accurate, and it does really, really well. So we're just making a few rupees at the moment, but I'm looking for the DAX to short it at 4 o'clock onwards. So here's a 15-minute bar for the people who are already in the trade. So there's our 15-minute fractal that we took here. So this is a 15-minute bar, and it is a good bar. Well, as far as a good bar is concerned, it doesn't get any better than what you're seeing. It is a grade 1 bar. It's running with the trend all the way down to 15 minutes. It is running with fractal breakouts on higher highs and higher lows. It's running above the 9 EMA. If you can't take that shot, you shouldn't trade. That is a perfect 15-minute bar. The issue that we've got is this issue here. If I can get this alert off before it goes off, is people will be trading into the BRN, big round number, $97 a barrel. So people who have been in this morning, like ourselves, or extending trades, may well get a profit take and the market may come back down. To that extent, we're just over halfway through. Two things we can do here, because of a BRN number, what we can do is we can take a bit of money off from this morning, if you wish. We can take half off, bang. So we'll take half off. Although, what's happened there? Did I just put that trade on? I didn't mean to do that, sorry. Take half off. What have I done? Why did it do that? Why did it do that? Take that out. Sorry, that's a wrong trade. So we've took half off. So that was over 0.5%. So we've probably made, I don't know, not a lot really, 0.2, 0.3%. But we've paid for this stop now, overpaid for it. We come out at 70 pips. So what we'll do, we've got 70 pips. We'll kind of move that up under this fractal here. There we are. So under that fractal there, we've banked the money. We banked 70 odd pips, and we've got 37 pips at risk. This is a 5-minute, 15-minute fractal. The issue we've got here is this resistance here. Now, is it anyone in the room want to do the 15-minute bar? We're looking at 120 pips.
Yeah, go on.
Right, okay. We might as well do it. 120 pips, 120 pips, and 120 pips. And this will be quite interesting, this, because we're coming to some resistance that we talked about this morning again. And when we bring this down, we need to bring it down to roughly 20. Oh, it's not allowing me to do it. This is what you were talking about this morning, wasn't it? IG just playing silly buggers. The 80 is nearly £20 worse. Let's see if we can just make that a little bit more. That's near enough. And we're doing a 2020. So we're looking at a break up here, round about 94. So 96, 94 is the breakout. Now, this bottom one we're going for, you see this blue line here, this is a resistance, a tertiary resistance. In other words, it's beyond the last secondary resistance. Now, if I just turn this off for the moment and go out into 1 hour and pull back, and we can have a look at where this resistance starts. So this is the resistance from this morning that we traded up to. It is also a 78.6 Fibonacci forecast retrace level and a 61% on the big one. So we were using Fibonacci's this morning to identify how to find out where your trades might stop and might go. The second level on the 1 hour is where resistance would start to be. So you can see here, the market has stopped 1, 2, 3, 4, 5 times. Where the market is broken through and sat on this level here as a wee bit of support. So this wee bit of support could easily become, and probably will become, a little bit of resistance. So we need to be careful of that while we're trading. So we were careful here, and if you look here, I put it down to 1 minute time frame. This is where we were this morning. So this is from we were trading this up into here from 8 o'clock this morning. So we made our money coming up, and we said the market would stop around here. And look what happened. The market come bang, reversed off here, and then really really faltered coming through here. And then what I'd said to people is we need a breakout of here. We need a fractal breakout. So this area is an area where the market's been choppy. And it's where people have been buying and selling. So really we want a breakout of that. And if the ideal breakout was a 15-minute fracker or 15-minute bar. If I turn this on again, hence our fractal breakout here. So the other issue that I mentioned as well here is that people are going to be taking money on the BRN, the big round number. So if we look here, what's the height of this bar here? Height of this bar is 96.89. 97 is the big round number, and people will be front running that. And you can see again, people are front run the big round number, and that's absolutely a common occurrence. We have took profits on this bottom one. We've moved our stop up. In fact, what we'll do in this bottom one, we've took just over half profits. And we put a stop to entry on that. So if we lose, we just take a couple of pips. And what we're going to wait for here is the market to pull back, like we did earlier on, pull back and make a breakout above the BRN. So at $97, there's lots of people that are coming in. We've got lots of participations. You can see here, participation is going up. Just because it's green and going up doesn't mean to say it's green and making money. That an ATR line here getting higher means the volatility is getting higher. And it's getting higher on the sells. People are selling, you can see here. Look at that big rejection pin here on that bar there. All that means is the market is got more volatility coming into the market. And you can see it's coming in here. But on the unbalanced volume, the market's still bullish. So all we're doing is being patient waiting for the market to tell us how to trade, how to get in. And we're doing that in a 15-minute. So you can go down to the lower levels and see what's happening at the lower levels. But you can see the market here. It's come up from the bottom. It's chopping sideways. It's broke out very gently, not very much. And we're waiting for the market to come down. We also could do a Fibonacci extension on that to see how that is actually working. We're looking at, just looking at Germany, it's 63 points up at the moment, which is good. So we're just waiting for this. Oh, what about look at YouTube? Is there any questions on YouTube? I've forgotten. No, right, okay. Right, so let's go and have a look at gold. So trading gold.
Steve, the Dow dropped quite a bit.
Yeah, I'm watching the Dow on either screen. We're 120 points down on the Dow. 110 points now. It looks like the Dow, is the Dow close? Right, we'll just have a quick look at this. So this is what we're looking at. I know the markets are all saying buy, buy, buy. Buy, buy, buy. Hogwash. It's not a buy at all. Don't believe everything you flipping read. It's not a buy for a simple reason. From a macroeconomic, it's not a buy. And from a technical, certainly not a buy. Now, a very quick, sorry, teaching people to suck eggs and all here, probably. But in every single war, gold goes down. Doesn't go up. It's not a flight to safety. Normal, if you take war out of the way, then yeah, it's sometimes when we've got risk-off markets and the flight to safety, we expect gold. But what happens in a war, and if you don't believe me, go and check Ukraine and all the previous ones before that, the market plummets. The market plummets with a flight to safety. And the flight to safety is the US dollar, not gold. And the US, what happens with flight to safety in a war usually causes oil to go down, it causes prices to go up, it causes inflation to go up. Therefore, you cannot cut interest rates, and therefore the bond market and the debt, well, let's say the debt market, does not come down. It stops the Fed being able to reduce interest rates, and the net result of a war and commodities being slowed up, oil going, prices going up, means that things get more expensive. Inflation potentially goes up. Bond markets know this, and price in the future, the bond markets start increasing 4-5% returns. Where do people want to put money? You want to put money in 4-5% that's guaranteed, or do you want to put it in gold, which is a non-yielding asset? They put it into the bond debt market. So gold goes down, people go into the bond markets, and that's why gold goes down. But from every war, you would, if you go back and have a look, I'll do a ditty for the room on this. You can see, well, look at Ukraine. When Ukraine first happened, after the first 4 to 6 weeks, the market blew past $2,000 an ounce, and then it went up to 5,800 at the end of this year, didn't it? Absolutely monster. I think the worst it's ever done's been a retrace of about 60% within 12 months of the market dipping. We've got a war, and it's in March, which is the historically from 50 years the best. If you with all the AI tools to check all this sort of stuff and find all these glitches in the market all the time, and if you would actually put you, well, this isn't advice, this is the data that's there. If you'd bought the gold, if you'd bought gold for 50 years in March, every March, you'd have made about 17% a year return on average. We know some have made a lot more and some certainly a lot less. But on average, if you've just been putting your money in gold, you've made about 17% a year, a little bit better than the bank. And in March, we usually get a reset. It is the first EOQ, the end of quarter options, an expiry, and positioning for tax years, taking profits, repositioning, and you often get gold taking off after March. So we are, when everyone else is doing the chicken licking of problems in the markets, we are buying gold now in the room, and we're buying gold futures and we're buying gold options. And every time the market pops down into this area here, we're buying gold, and we've got enough positions. We're buying gold, enough for 3 tranches of gold, and the gold and using gold futures. And we're in 3 positions. We're up 254 points. From our first buy, our second buy, we're down 9 points, and we're looking for a third buy in gold as well, which will probably be next week. But while the market, for a day trading point of view, gold is certainly short, ideally a bit shorter. We're into the 4th week of a war, and we generally see gold start to perform into the 4 to 6 weeks, and we're in week 4 now. So expecting gold next week to make a move to the top side, and we'll see where we go with that. But we're on options. We talked about options this morning. August options, you can't get August options, you have to get June options and start building in 50, 5,400, 5,800 options for gold. I'll stop waffling. Let's go and look at the DAX. The DAX is very volatile, so the thing to do is not to get too upset about the way it's running up and down, because that's just the way it does. So long as you operate within its average true ranges, it can go up and down alarmingly, but so long as your risk profile is only 1%, you don't give a diddly squat. We're just playing the strategy, letting the market do what it's going to do. So let's have a look here. So we're down 113 pips, which is equivalent on our trading platform to 11 pounds. So looks like we're going to close into CBOS, which means the market may well continue down in the same direction. And if it does, we'll just let that come all the way down to the bottom, and just let it come down the bottom. The DAX is 24 points up, and let's have a look at crude. We're going to be back on again at 4 o'clock for crude, and back on for the FTSE and for the DAX, if it's got anything to short. So we can see where we are here. Market's gone up. We've had the $97 reaction. We're not particularly bothered. We've took profits. If this gets stopped out, it is just a stop to entry. Cannot lose. In fact, we made a couple of
Good
points.
place to buy here, however.
Yeah, we're coming back. We're getting quite nice. Quite nice. Isn't it? 5 minute. Looks like we're gonna get a clean sheet. But we made about 0.3% to add to the stuff that we've just done. We've got a fractal structure coming down. It started to mold down. Ideally, what we won't have time today. We'll open up again at 4 o'clock, and we'll have a look at see what gives. Ideally, it'd be nice to see the market come into these levels, wouldn't it? Down into this area here, that would be nice. And then we'll have another assault on $97. But again, it's just patience. That's all it is. That's all it is. We're waiting for that breakout. So we're just adding to the pot. So I don't know what we've got now, over 3%. and we're in gold long. That's up as well. We're in Germany. We're up 65 points on the DAX or thereabouts. Not really doing anything. I was kind of hoping that we'd get something on the DAX this afternoon. We'd get a nice rally, but you can see it's really not doing anything, is it? What are we now? We kind of, what have we got here? We've got 75 points on the table. But you can see here it's just rejecting, isn't it? The market just needs to blow out of this area. Look at that. That's absolutely nightmare scenario, isn't it? What I'm going to do now, guys, we were expecting this to rise anyway. I think, what should we do here? We've got at 100 pips, it's 0.5%. So we've got about 40.4%, took 0.3 on crude, 0.7. So what I'm going to do is, because we have lost money on other trades, from a risk management point of view, I'm going to take the money on here to add to the bits of money that we made on crude to offset any US session losses that we had on Wall Street. I'm confident Wall Street will come up and close the gap, but you know, it's kind of measuring your risk management. We're going to come back at 4 o'clock anyway to hopefully finish off the DAX and finish off the FTSE. This come up to 0.5%. If you see 100 near, guys, thereabouts, it's close enough. Take those rupees. There we are. There's 0.5%. Let's take that money, so don't have to look at multiple assets all the time. And what we'll do, we'll look for a short into the close on the DAX. We'll look for a short on the FTSE as well. I'm kind of going to look, see if we can get between 1 and 2% between those two. And hopefully the FTSE will keep coming up so we can give it a tap at 4 o'clock with a 5-minute bar reversal. So yeah, we've got lots of asset there to crack in slowly. In the meantime, between now and 4 o'clock, if you see a 15-minute bar reversal, just take it. It's but the 15-minute bar reversal, of course, the type of candle that you'd be looking for would be a flat bottom like this. Closing under the 9 here. Stop above here, looking for a 1-to-1. So that's what you'd be looking for. But ideally, the market will rumble up into this area. That'd be great. And then we'll short it down into the close. That'd be the perfect storm, I think. Yeah. Yeah, I wouldn't mind doing that. Yeah, let's go and rip some rupees out of the market. Let's go and have a look at that. Oh, I didn't look at the tech. So before we go and look at the NASDAQ, the NASDAQ is a 15-minute bar short on the first 15 minutes. Should be set up. We're going to have a look at that. But we'll just have a quick look at the Dow. The S&P, we'll leave that beast alone because it's not come on. It's later on in the day into the American session, into the close. We can have a look at that. Where are we with the Dow? So kind of nowhere. What's happening there? What's that? What's happened with the chart? It's gone mad, hasn't it? That's a bit better, I guess. That's it. I don't know where I'm before. So we're back inside camera breakout short. What we're looking for now is the DAX to come in and give it some, if that's such an expression, and close that gap. So we want all the money back. We've loaned the Dow, and then we want some interest on it. So Paul Trader, he's got a 1 minute candle, good for 20 points. Oh dear, that sounds like a Clint Eastwood trade tonight. He's feeling lucky, Punk. Let's go and have a look. He's trading against the trend, I think, unless it's reversed. I don't know. We won't be trading against the trend. We're going to wait for a short. But absolutely dead right. He's absolutely spot on. No problem in trading against the trend, and none whatsoever. I just don't do it. So there you are. That's the candle he was talking about. He's absolutely spot on. That's a grade 1 candle. Oh, flipping heck, I should be using disappearing pen. So yeah, it's really nice when people spot these things. And there's a grade 2 candle. That's a 3. Leave that alone. That's a 3. That is a great candle. It's a grade 1, flat bottom base, opening up above near enough on the 9 EMA. And you know, you'd sort of want to be targeting the daily pivot, because the pivot boys, and there are a lot of them, the pivot boys will short that, guaranteed. Like we have the Mickey Longs, we have a lot of pivot boys, and they trade that. So a break of that candle, you'd see your way to getting towards 45 pips on that. So if you're going to trade that, let's say that is 6 minutes to go on that candle, but if that stays like that, then you're looking at a 1-to-1 risk reward, and that no problem at all. No problem at all. If you like to trade against a trend, and there's no problem with doing that, you can be very successful trading against the trend. But a grade 1 candle is was a grade 1, but candle, look at that. As soon as the wick gets longer than the body, it's not a grade 1 candle. The body needs to be bigger than the wick. And it's an unbalanced job here. It's a pin in the ass. It's disappointing when you see such a nice candle set off with a nice body like this, and then oh, you can draw that little wick. That's perfect. But now we're getting the market rejected. So if you see a 15-minute bar reversal like this, which is again a grade 1 candle, that's a grade 1 candle. That's a grade 3. There's a 1, there's a 1, there's a 1, there's a 2, there's a 2. Take this down to camera breakout short. Or ideally, the perfect storm would be that Paul gets his money up to here, and then hands a button and we trade it down to here. Or we get a 15-minute bar here and take a break of the bar down to here. But just complication. And you can see how many people are now. It's hardly anyone. That's the problem, isn't it? We make too much money in the morning. No one can bother with the afternoons. Never mind. So let's just see how this candle plays out. And then we're going to be finishing at 2:30.
Yeah, I've got to go, Steve, so I've got to go and walk the dog, and I'll be back for 4.
Your dog's legs must be bloody walked out. You must be walking you walk the dog all. How many times a day do you walk the poor thing?
Twice.
You got short, stubby legs now.
Yeah.
All right,
Helps
Clive.
as well.
Yeah.
Are you
I'll see you,
on
mate.
the morning one or the
Say
afternoon?
again.
Which room are you in?
Or which room? Yeah. So if you go to Slack and use the morning link, not
Right.
this link.
Yeah. Okay.
So
Catch you later.
yeah. All right. Cheers.
Right.
Cheers, Clive.
Cheers.
Bye. We'll just hang on and see what this is like, and then I'll be grabbing a drink, and I'll be moving on to the scanner. So we will track what's happening in the afternoon. And I don't know why the English don't like the scanners. Americans really do like the scanner. I think it's 90.1% of 90.1% of the people that use the scanner are all American. I don't know why English don't use it. Then there's a toss-up between England and Spain and Netherlands. This candle, what a horrible candle this is turning out to be, isn't it? Flipping heck. Yeah, that's not good. We're getting all these high, you can see here. That's me. And again. All these horrible candles here. All these rejection wicks. We've got a nice body coming up and then a market just rejecting. Tells me that either people have been trading low and they're kind of taking profits. So more likely, as the market's coming up, the bears are trying to short this and pushing it back down. So the bulls are in control while we're above the 9 EMA, but the bears are coming in. Look at that, on balance volume. Big warning sign. Renko block. Here. Renko, screaming red. We're about to do a 926 cross as well. This market's on its way down. I think the scanner will grow in time. Yeah, yeah, it probably will, Paul. I don't advertise about it, but I guess people have got to find it. And you can't advertise for a scanner or anything like that because that comes into the Google hurty words. You can't promise people as trades, or you can't even say, because I'm now a level 3 influencer, whatever that means. And apparently, the channel is growing so quickly that Google have now got an interest. And I was in a Google meeting last night. And what you're not allowed to do in finance education here is you can't say, follow this tool and it will help you set up. The implication there is it will lead you falsely to get people to trade and misguide them, mislead them. So you are not allowed to help people. You are not allowed either to record a win and tell people that this is a recording of a winning trade. You can't do that. It comes into the hurty words and making false allegations. So we've got every live trade that we've ever done since September 2019. I'm not allowed to publish any winning trades that we've actually done and say in the title, this trade won. Because it's like all this stupid stuff that's going on with Meta at the moment, that this 16-year-old girl was, influenced by social media. It's all so lefty rubbish at the moment. It really is. And if the Google bots, after this is finished, watching this, and it won't like my hurty words and maybe ban the live stream eventually. I don't know. It's try and help people. and you get them for it. What I should do is wear a baseball cap the wrong way around the gold chain and promise people stupid things, get loads and loads of followers, con them all out of a couple of quid, and then run away. That's what seems to happen in the trading world. There's very few genuine traders, very few. There's lots of great productions, great articles, hindsight articles, but there's very few people that can actually trade on YouTube. But the scanner, if people tell each other to talk about the scanner, then it's put up there every day to help people. And the facts are that it finds 2 or 3 trades a day, every day, that are absolute humdingers. And that's the facts. It does. It just scans the market live, continuously. And yeah. If you're allowed to put few up, I'd put investment scanners out for the Mag 7. I've got robots that trade the Mag 7. But ideally, we do Mag 7 Mag 7 scanners on 4-hour and daily times, telling the providing the opportunity of giving people the opportunity to press buy or sell in a very confident manner. I was going to do American scanner as well. That just did the American markets, only the American markets. It's highly focused on what's happening, but there's not a lot of people looking. 90% are people that are American, but if the American guys get interested in looking at pretty bloody good scanners for the American market, I could put that up to help our American guys. Not a problem. Look at this. So we're failing. We're starting to fail here. So keep an eye on this. I'm not going to sit around. It's a nice sunny day outside, 30 degrees. So I'm going to get outside, and it was windy last night, flipping pools full of leaves. So I need to get those out for the weekend and have a cup of tea. And I'll be back at 4 o'clock. And let's see if we can set crude up for a nice buy. Let's see if we can short the backside out of the UK markets and the DAX markets. So that this will be in my live private room. I forgot to say, with British summertime and Easter coming on, if you're interested in learning how to trade, they're going to put over the weekend a 25% discount for Easter. Because I've been told we have to do that. So we're going to do a 25% discount for people. If you're interested in learning to trade, get a chunk of change off the membership and learn to come and trade. But, learn to come and trade in the style that we do. There's lots and lots of ways to trade correctly. Many more trade wrong, but there's lots of ways to trade correctly. And if you like using support resistance, reversal with the trend or trend trading, fractal breakout trading, then that's what we do. Right. Any questions before I go, guys? If you like the stream, don't forget, put a thumbs up. Give me a thumbs up in the streaming. That's always good. It makes it makes YouTube think it's a decent stream. People like it. So if you can, or if you like what we've done, give it a thumbs up. And also, if you go onto the scanner as well, please give that a thumbs up as well, because what will happen is if it gets enough thumbs up regularly or people chat regularly, YouTube will organically spread it wider, and people will start to find it, and hopefully it'll help a few more people. Right, no questions from my room, no questions from YouTube, so I will bid you all bye-bye, and we'll, from a live streaming point of view, The scanners will be working every single day, and we will be streaming live again on next Friday into the American markets. And if we get enough interest, I'm quite happy to do a few more US sessions if that helps people. If it can help people, no problem at all. If you want a discount to come and join, then I will put that up over the weekend. You can come and join. If you want to join as a trader anyway, a subscription trader, in other words, pay monthly, then you can have a look and see what it's about. When you first subscribe, you get 140 quid's worth of all the indicators, the daily edge, all that is all wound in. So that really means you pay 42 pence a session. I think it works out 42 pence a session, or is it? It's £10 a month. But also you get 4 gigabytes of learning videos and materials, and you can listen to me every day. Might put you off, but they are. You could, you don't get any cheaper than that, and you can dip your toe in the water and see what it's like. But if you don't, if you're quite happy just to trade on your own and whatever, get the 15-minute strategy and sign up for the daily edge. 15 quid a month. It's absolutely nothing. And we've now got quite a following on the daily edge, and it is super accurate. It's been super accurate today. Everything the daily edge has said have happened. We hit all our targets again. What's that? £3.50 a week. No, it isn't. I don't kind of £7, £3.50 a week, 5 reports a week, and 98% accurate. There we go. Not allowed to advertise the daily edge as well because it's leading the witness. All I can do is provide people with data and some ideas. The ideas work very regularly. Right, guys, I'm going to go. I'm going to stop the share. I'm going to get off and get me a cup of tea.
Cheers, Steve.
What did the Daily Edge say about the FTSE today? Well, read it. This all comes to the taking the horse to water, but you can't make the buggers drink, isn't it? See you at 4 o'clock, guys.